Oil prices are tumbling. That's our top story today on the Wall Report. I'm your host, Greta Wall. Oil prices are down sharply today amid optimism about the latest talks between Ukraine and Russia and a new round of COVID lockdowns in China. West Texas Intermediate crude futures falling more than 8% today and briefly dropping under $100 per barrel. Brent crude prices, meantime, are also down about 8% at around $104 per barrel. Now, the cool down in oil prices is boosting Wall Street, with the Dow surging more than 300 points. The S&P 500 is also in the green. The Nasdaq, though, is trading flat as Treasury yields spike. We'll touch on that in a bit. But China, meantime, is the largest importer of crude oil in the world and the second largest consumer globally after the U.S. The country, though, is imposing new COVID lockdowns amid a spike in cases, prompting fears of a lower demand in the oil market. Now, China operates on a zero COVID policy, meaning even small outbreaks prompt citywide lockdowns. The city of SHENZHEN becoming the first to be fully shut down today, with only non-essential businesses allowed to be open. Now, that move is prompting fears of more supply chain issues for the U.S. and even more inflation. Shenzhen is a major tech hub for the globe, and it's also the fourth largest port in the world. Apple shares falling in today's session as its largest supplier, Foxconn, was forced to shut down operations in Shenzhen. And U.S.-listed Chinese stocks are also tumbling amid those restrictions and new fears of possible delisting. Alibaba leading those declines, falling nearly 7% in today's session. The drop comes after the SEC identified 5 U.S.-listed Chinese companies that failed to comply with the Holding Foreign Companies Accountable Act. Now, that act allows the SEC to delist companies from U.S. exchanges if they cannot review company audits for 3 consecutive years. JP Morgan Chase analyst also downgraded Alibaba's stock today to underweight, as well as JD.com and Pinduoduo. Now, meantime, Treasury yields are popping today as the Fed prepares to meet. The yield on the 10-year Treasury note jumped 10 basis points today to over 2.1%. That's the highest it's been since July of 2019. The central bank kicks off its 2-day policy meeting on Tuesday with the announcement of their first rate hike since 2018 expected on Wednesday. CME Group's FedWatch tool shows 99.8% of traders are expecting a 25% rate hike. And as the bank prepares to meet, Americans' inflation expectations have hit another record high. Respondents to the New York Fed's survey of consumer expectations in February said they believe inflation will be at 6% a year from now. Now, that's a record high for the poll, which dates back to 2013, and an increase from 5.8% in January. Consumers believe that inflation will remain at 3.8% 3 years from now. But the Fed's picture looks much different. The bank's most recent summary of economic projections shows inflation expectations at just 2.6% by the end of this year. So who do you agree with, your fellow consumers or the Fed? Sound off in the comments below, and I'll see you all back here for the Wall Report tomorrow. Be sure to hit that subscribe button and the notifications bell before you go.